So how do we learn how to develop procedures? We need to practice. So I've got this template here. We've got the account name, the firm type, and you can pick a primary production firm, a manufacturer, a retail service, or a wholesaler. We pick an account, and then we look at testing the assertions and different options that might come into play. So let's pick a company, and I'll pick something that's fairly well known. Alright, so I've picked Coca Cola, or Coca Cola Amatil Limited, and we know that they are a manufacturing firm. And let's use the inventory account. Alright, so we know that inventory, we're going to be worried about existence, valuation, completeness, rights and obligations, allocation, and then also presentation and disclosure of that inventory within the financial statements. So here down the side, I've got a list of potential procedures. We can inspect things, we can observe, we can recalculate, we can do an analytical procedure, inquiries of personnel, confirmation, tracing, or vouching. Now, of course, to look at the difference between tracing and vouching, you can check out our other YouTube video. But our inspection, I'm just going to modify this. We can inspect physical assets, or we can inspect documents. So we're going to use a combination of these and see what's appropriate in each circumstance. So let's look at the existence of inventory. I want to prove that inventory really is there. The inventory that's in the accounting records is really on the floor. So we might use our inspection of physical assets. So that could be something like a stock take. Alright, so we take a sample of inventory items from the inventory records and check back that there is stock in the warehouse. So I could do the stock take myself. I could also observe client staff doing the stock take. I can't use recalculation. Recalculation is not really going to help me prove that inventory exists. I might use a rough analytical procedure based on management accounting information. So I could compare raw material usage versus our actual production. Alright, we know that our opening balance plus purchases of raw materials used should give us our closing balance. And we can compare the raw materials used to how much it says there should be produced, see if that makes sense. We could talk to personnel about any discrepancies we might find. We can't really confirm here, so confirm is not going to be a possible test. But when we're doing our existence, we're going to be vouching. So our stock take is actually a form of vouching where I start with the accounting record or my inventory record and I match it back to my actual inventory. So these other ones we don't use. So as you can see here, there are a couple of different options on how we might gather evidence on existence. So let's look at valuation. Alright, it's not just accuracy, we look at valuation because we know with a manufacturing firm, our value is our direct materials plus our direct labor plus our overhead. So it's going to be a bit more complicated. Now, I might be able to inspect my physical assets as part of my stock take, so that could carry over there. And I could look for obsolete or old stock that might need to be written off. I could observe, again, obsolete or old stock. Recalculating might help me with my product costing. So I could reperform product costing calculations. So if they're using activity-based costing, we go back and we look at the activities. If they're using plant-wide overhead or some other form, we could use whatever accounting method they're using. Check the direct materials, direct labour, that those costs are correct, or using the correct overhead pools. I could do some analytical procedures, again along the similar lines of how much raw material did I use, does that match up with the goods that were produced. I could talk to personnel about how the product costing works. So this is likely to still be in the understanding the client part, but we could ask about costing methods. Alright, we can't really use confirmation because there's nobody to write to there about how we would do costing, and we might use tracing or vouching. So regardless of whether we're starting with a stock take and we're working back to the inventory, or we're starting with raw materials and following it forward, we can use recalculation or analytical procedures along with tracing or vouching to check that the value of that inventory is correct. Now I might also decide that at the same time I would investigate cost of goods sold. Because cost of goods sold obviously uses our inventory value. Now the next one is completeness. Is every piece of inventory in the financial statements or in our warehouse recorded in our financial statements? So we know with completeness that our most common procedure is going to be tracing. Okay, so we could select a sample of inventory and trace to the accounting records. Alright, we cannot use vouching for completeness. Vouching is always an existence or occurrence test. Again, I could use the analytical procedures, compare how much I should have versus how much I do have. I wouldn't use recalculation because our recalculation again focuses mostly on that accuracy. Observing. So you might do some observation. Can I see any inventory as part of my tracing on the floor that I don't recognize? Put that one up there. And inspect some documents as well. As part of our tracing, we're likely to be inspecting documents. Alright, so our next one is rights and obligations. So my rights and obligations is, do I actually own that inventory? Okay, so I might need to check who owns the raw materials. Because if I own the raw materials and then I use them in the manufacturing process, then I own my inventory. So it's probably not going to help me to do observation, recalculation, analytical procedures. But what will help when I'm trying to find out who owns those raw materials is inquiries of personnel. Alright, so I might want to talk to the purchase manager or somebody involved in production. I can use a confirmation here, so I could send a positive confirmation, positive confirm to the suppliers. Can they confirm the method that the client uses to purchase our inventory? When do we own it? Do we own it when it leaves the supplier, or do we own it when it reaches us? So it's not necessarily tracing or vouching specifically, but it's more going to be along those inquiry lines. Alright, our last one is our last main associate is going to be allocation. So allocation is about, is it in the correct spot as an asset? We've got two options. Obviously, you could have a current asset or a non-current asset. Now for Coca Cola, I don't think we're going to have too many non-current assets. So non-current assets, remember, are those assets that we're not going to get economic value from for at least 12 months. I can't imagine Coca Cola holding on to any of its inventory for longer than 12 months. So we want to make sure that everything is a current asset. So how do I make sure when I manufacture goods, I go debit finished goods inventory current asset, credit my work in process? Well, I could do that using my tracing or vouching, regardless of which, doesn't really matter which one, but we want to check journal entry uses correct current account code. Alright, and when you're doing that, you're probably going to need to look at what we call a chart of accounts. Alright, so we're going to need to inspect some documents at the same time. No observation, no analytical procedures. We might inquire of some personnel as we're doing that checking. No confirmation. So let's cross out these ones because they're not useful. Alright, so you're going to need to look at the chart of accounts. Remember, our chart of accounts is our list of all the accounts used within the company's accounting system. And then the very last one is my presentation and disclosure sections, which are about understandability, completeness, valuation. Often a lot of these same assertions are doubled up. But we want to make sure that our disclosures are in accordance with our accounting standards. So in Australia, that's our AASBs. Of course, we're internationally harmonised, so our version of IFRS. So if I'm going to need to inspect documents. Alright, so I'm going to need to review the financial statement disclosures, make sure our inventory is disclosed appropriately. So I'm not going to do any observation or recalculation or analyticals, but I want to make sure that I talk to personnel about accounting policy choices. Alright, we know that we've got different versions or different choices for valuing inventory. So we've got weighted average, LIFO, FIFO. Are they using the right policy? Have they made the right disclosures in relation to that policy? There's no need to confirm with an outside party. And in terms of tracing or vouching, we can start with inventory and follow it through to the financial report. Or with vouching, we can start with the financial report and match back to make sure that we're following the AASBs. But regardless, we need to compare disclosures with our international financial standards if you're international, or within Australia our AASBs, because those are our final word. So I've done an idea of what sort of procedures we could use to test inventory at Coca Cola, but we can use this template to do anything. I could look at accounts payable, I could look at accounts receivable, I could look at cash. And you don't necessarily need to write out procedures like we have here, but it is important that we practice mental exercises. So you don't even need to write them down, you can just think about them in your head. One thing to remember is that an auditor has a responsibility, and what is best practice is to gather evidence on each assertion. Okay? So I can't just decide that existence is important and I'm not going to gather any evidence on valuation or completeness. I have to make sure that I've always got all of my assertions covered. Now, as a reminder, and I've just used brief descriptions here, a reminder of my rules relating to designing any sort of procedure. I have 3 rules. The first one is use the audit terminology for the procedure. So if I'm recalculating, I'm vouching, I'm doing an analytical procedure. Number 2, use the client names for the documents. For documents, roles, or processes. Alright, so you might have one company calls their shipping department shipping, another one might call it distribution, and then 3, be specific in your description. Okay, so the description needs to be specific enough that somebody could go away and test it. An example of what not to do, but we actually see some of these in our textbook, would be something like vouch sales journal entries. You might think, what's the problem with that? The problem with that is that we're not specific. We don't know what we're vouching it to. Are they called dispatch notes, called shipping documents? Something that would be more appropriate would be an example like this. Vouch a sample of sales journal entries to sales invoices and packing slips. So I've said vouch. I've said, okay, I'm starting at my journal entries and I'm vouching it to these specific items, alright? But there's still not enough detail because what exactly am I looking for in my procedure? I want to match, so I'll say match product ID or description and quantities. Alright. I could take that further. So here I'm proving that sales really did occur. If I wanted to take this test and I wanted to make it for valuation, I could say something about match quantities, products, and recalculate invoice and compare to journal. Alright, if I wanted, so that's going to be more about accuracy. This one here is about occurrence. If I wanted to take this one step further and look at the cutoff assertion, I could say something about check goods shipped by end of financial year. Alright, so I could take my basic information about vouching a sample of sales journal entries to the invoice and packing slip and then add it to an occurrence test, an accuracy test, or even a cut-off procedure. So it's important that your procedures are nice and detailed. Often when you give something like vouch sales journal entries or conduct analytical procedures on accounts receivable, that's going to be too vague for somebody to be able to go out and do. So you need to be able to give a description that's detailed enough so that if a junior auditor or somebody else on the audit wanted to do the actual procedure, they would know exactly what documents to collect and what they're looking for, what they're comparing between those documents. Now these procedures work equally well. These rules apply for both controls and substantive testing. Doesn't matter which of the two you're using, as long as you follow these specific requirements. And always make sure, of course, that your test matches up to the particular assertion. There'd be no point in doing recalculations if you're testing occurrence. Alright, no point in looking at ship dates if you're doing accuracy, right? That's related to cutoff. So it's about making sure as well that our assertion matches with our procedure.